there's always two sides of a ledger, debits and credits. You have continued to accentuate there's another side to the perception of inflation by our central bank. Most humans would call it cost of living. Explain why this subtle differentiation is so important.
Well, if the Fed would replace the word inflation with cost of living, I think the discussion around their policies would be much different. So now they're on this analysis that if inflation runs below 2% for a period of time, then they need to have a period of time where it trends above to sort of average out. So above would be, let's just call it 3%. But take out the word inflation and say, okay, we need a 3% increase in the cost of living, and somehow that would be the right way of calibrating policy. Meanwhile, that would reduce real wages. It would send this consumer-dependent economy, I believe, into recession as consumers retrench on those those types of cost increases. And it would also lead to higher market interest rates, which would also damage a credit-dependent economy. So I think the Fed needs to throw out the word inflation, replace it with cost of living, and then reanalyze this discussion.
You know, off camera, we were discussing if there's one country that is the poster child for paying too much attention to inflation at the expense, being so clinical about it without the human element, it would be Japan. Decades and decades of stagflation. You know, don't the models get turned off once in a while, and all the people at the Fed table sit down and actually talk about how citizens are affected by these long-term strategies?
Yeah, I mean, the great thing with the Bank of Japan is we have this period of time providing us with evidence of how zero interest rate policy and many years of QE work. And instead of learning from those lessons, the European Central Bank, the Bank of England, and our Fed seem to be intent on repeating all of those mistakes. So the discussion specifically with the Fed last week, they seem to be having the same discussion that the Bank of Japan has had all these years. And you can assume that when we do go into the next recession, whenever that might be, they'll cut rates to zero again, they'll do QE, which is exactly how the Bank of Japan has addressed their issues over the many years. That never worked. So take the Bank of Japan as a lesson and do the opposite.
No, it makes perfect sense. We're just about out of time. But in the final analysis, you know, central banks were never meant to be, you know, when we pull the alarm for recession, do everything you can to stop it. Those are very therapeutic. You know, they're not about trying to avoid setbacks. They're there to nudge the economy to maximize its efficiency.